Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello viewers, welcome to the Fast Profits Daily. Myself Brijesh Bhatia. Markets have been very volatile in the recent times, and that too with the gap up and gap down opening. Uh, I have done a video onto the market that fear on D-Street is at the lowest level of 2020 and 2008, where market have corrected very quickly. Back into the 2022, where stocks are trending at around COVID levels. So there are few stocks which are trending higher. And if I look at the markets, it's been taking huge support zone at 15,400, 15,700 levels, which I have mentioned in the video, and markets coming back very strongly. If you want to know the levels on Nifty, Bank Nifty and sector analysis, do follow me on my Telegram channel, where I regularly post charts onto the various levels for Nifty, Bank Nifty and sector analysis. In this video, I'll be discussing, should you buy the diagnostic stocks? All the diagnostic or most of the diagnostic stocks are trending at 52-week lows. Is the COVID rally, or I would say the pandemic rally, over into the stock and one should exit, or should you buy at the lower levels? Let's start with the Lal Path Labs over here. And if you look at the first chart over here, prices broke out, retested in 2020, and if you look at this black line where the retest happened, breakout and test happened, since then the pandemic rise was very fast and furious, and we have seen pharma, one of the top leading sector into the 2020. But if you look at the diagnostics, yes, the rally was continuing till first half of the 2021 as well. And if you look at the rally, it was very fast and furious for Dr. Lal Path Lab. We saw a breakout or somewhere around 1250, retested those levels in during the pandemic, and it went to around 4400 levels. So it was nearly 2.5 times plus onto the stock. But now we are back towards the lower level, somewhere around 1900 levels. Should you invest? Let me show you the second chart, what the technical structure is indicating over here. Now if you look at this red line on your screen, we have seen a fresh breakdown of the rising trend line, and generally when this steep rally happens and the breakdown happens, the fall is very severe, and that's what happened into the Dr. Lal Path Lab. Now look at the breakdown. It broke out at around 3800 and back towards, now we are trading below 2000 levels. So since then it has been fallen by 50%. And I still believe, if you look at the structure over here, as per the Dow theory, the lower high, lower low structure is indicating that still there is a negative momentum continuing into the Lal Path Lab. So it's an avoid as of now on the Lal Path Lab. If I look at the second chart over here, this is the Metropolis chart, and again similar structure. Look at the rally which we have shown in 2020 to 2020. The low was somewhere around 950, went on to around 3600 levels, nearly 4 times, and coming back towards 100, 1750, 1800 levels downside. And again the similar structure, the breakdown happened into the rising trend line, and we saw a huge selling pressure coming onto the weekly scale. Additionally, if you look at this green line over here, it is indicating that the fresh low has been forming onto the weekly scale, which means that the higher low structure which was there during the pandemic time is turning out to be the lower high, lower low structure. And the lower high, lower low structure is, as per the Dow theory, is a bearish structure. So one should definitely avoid Metropolis as well as an investment avenue. Third, I am looking at the Thyrocare over here. So now if you look at the Thyrocare, we saw the 5-wave upside into the Thyrocare right from 2020 low. If I look at the low, which was around 425, 430 levels, back towards the 1400 plus levels, and now the stock is back into the 650, 670 marks, which is again half off from the higher levels. So I still believe, if you look at the structure where the green line, which is the lower high, lower low structure, indicating that this stock as well into the bearish structure as per the Dow theory. So if I look at the whole diagnostic, I have just taken these 3 stocks because these are the leader into the diagnostic space. And if I look at the broader sectoral wise, the structure is very bearish, forming the lower high, lower low structure. So as an investment, I think it's an avoid till we see a consolidation happening into the stocks. The stocks are forming higher low structure onto the daily as well. But as of now, it's clear indication that the broader frame for diagnostic stocks is very bearish, and one should definitely avoid investing into these stocks. And in case you are holding, any rise could be an exit for me, because still the higher low structure is not formed. I think this stock should be an avoid, or sector is an avoid from the short to medium term point of view. Signing off, Brijesh Bhatia.